Hey guys, welcome back. I'm learning about our fuel summit. This video very short. Cool. So last week, right, we discussed how we had a pretty bearish engulfing candle and weakness was likely going to follow suit, right? We saw that we pretty much followed through to the downside. It was a pretty timid week, you know. We could see the weekly was barely down 0.3%, which is absolutely nothing in terms of index, right? I'll go to the daily chart. Please excuse my coughing. I read the daily chart, you'll be able to see that this was the range, right? You can see we were pretty much majority of the week, we were circulating between 4540 and between 4580-ish, right? Up, down, and we broke down on Friday. And this morning, we're kind of retesting the edge of the range, right? So it remains to be seen whether, the market follows through back within this range, right? Pretty sure you've seen this wedge drawn multiple times. And I've seen a lot of, like blatant predictions, right? With with this lot of it breaking out, right? People are just like, oh, we're gonna go make another high just because it's a falling wedge. That's not how falling wedges work, right? You saw what happened the last time, right? We just rejected resistance and we came back down. I personally believe, right, like I mentioned last week, generally when you tend to have a bit of a correction, it tends to extend for a lot longer than people, can people a lot longer than people are expecting. So even if we do break out of this wedge, something like that, we're still stuck within a larger, corrective pattern, right? So I am kind of looking for a test of this lower 4400 area. You can see kind of a important fib level as well. And in demand zone before, we go up for the wave five. So I still do think we do go up higher, right? I'm just not sure this correction has I mean, yeah, technically, if you look at it, right, it's lasted 27, 15, yeah, almost 3 weeks. So, I mean, yeah, this correction could be done here, but we would need to see a lot more, right, on the index before I can classify this way forward down. The minimum requirement, as I've stated in the past, was the 0.236 bid, and we have completed the minimum requirement. But yeah, I'm not willing to entertain it, right? Until we at least, try to get over this first level of resistance. So let's take it step by step, right? Either this, right? Like I told you, this is the daily range. Either this is going to get rejected and we come down to the bottom and bounce, or the market is going to try to break out, right, of this wedge and about 4505, right? If we break 4505, then it should, 35 points be able to hit 4537. And this again is a major level of resistance, right? If it can break and stay above, then it does, right? We do have a gap to fill that looks unfilled at 4598, right? But yeah, I still think that this three wave, and then higher. But yeah, a lot of people also seem to believe that this three wave was the end of year wave four, right? Even that wave two was more complicated. They are on the page that this wave four is going to be a lot less complex. And yeah, I mean, that's not a wrong thesis, that's certainly a probability. So yeah, that's bigger picture. I am still looking for, a wave five higher. Is just I'm not ready to consider that we're in the process yet. I'd like to see a lot more price action. Right now, we're in a very choppy range. There's not a lot of volume. August generally tends to be choppy, so I'm pretty uninterested in this price action, given that I'm barely trading as well. So yeah, take my opinion with a grain of salt, and let's go look at see how we're doing right on the keep view as well. Similarly, and we are right. I zoom out, we're at the bottom of the channel. So, I mean, till this breaks, I mean, bears are not really in control at all. Let's fib it, right? Fib the top and the bottom. And you can see that same as SPY, right? It's done the minimum wave retracement, but generally, right, wave fours do tend to come down to this 0.382 that I have marked, right, on both the charts. That's the main reason. That is my main area of focus is a lot of the times, I'd say 80%, 90% of the time, those do come down to the 0.382 fib. So that's the reason you can't just be blindly bullish at this level just because there's support, right? It can definitely, right, yield a bounce. It's definitely an area of bounce. And again, if this area doesn't hold, right, when you break this channel, then you know you're very likely going to come fall down to the next level of support, right, at 355, 350. So those are your levels, right? So be watchful. Don't be blindly bullish or bearish based on how a day is operating. Be smart about how you're trading this price action. We look at the dollar, for example. We're still waiting for dollar to hit the top of this channel. So again, kind of going to be hard for a market to have bottomed already without, dollar testing this prior area of resistance. And the 10-year is also, it doesn't seem to be slowing, right? Though it's struggling to stay above, it's not getting under either. So there's still nothing bearish about this chart. This very much could have been the start of a wave 5. But let's see, I still see a little bit of hesitancy. But yeah, I mean, yields could continue pushing higher as long as it holds over 4%. But yeah, let's see. TLT again hasn't really had a strong breakdown, right? But we do know it has a gap to fill at 92, which it probably will, kind of fill. But this kind of sideways action usually, right, is a wave B. So I'm still on the page. Yields probably come test lower before they go higher. But I mean, remains to be seen, right? Take it step by step. Anyway, let's go to this week's watch list. The first thing I have is Google, and this can be played both ways based on how this market is gonna break, right? So the first thing to watch out for is watch this level, right? So far, Google is sideways in a pennant, and the reason I have this drawn as an ABC is because I can count, where I go to the lower time frame, you can see that I can count like 5 waves to the upside. So, I mean, but that is these 5 waves, right? If I consider this as a wave 1 and this as wave 3, then Google could have a wave 5 ensuing. So I'll put it this way, right? This is your bull trigger here, 132, and this is your bear trigger, right? Same as the market. The other stocks also are stuck in the range, right? We break below 128, we fill this gap at 122.5. Break over 132, then you can likely hit 136, 140. So that's the reason I have Google. It could make good moves on either side depending on which level it kind of breaks, right? Next one I have is, I think, COP. Yeah, the next one I have is, yeah, I do have COP. And again, go to the daily chart, right? For COP, you can see that we've broken the downtrend. This again, sideways action, right? We broke out, we retested the breakout. Now it's establishing a higher low. So, I mean, essentially, bullish or bearish, it looks like it wants to hit the 1.618 fib, and it does have a gap to fill to 122. So this is a nice $4 move. Over 118, I could definitely see COP, pushing up to 121.85. So yeah, kind of could be a good, right? If it can break over this previous high, then probably fills the gap. So that's why I have it. on this week's watch list. The next one I have is SC. And I mean, I know it has earnings, and I'm not trying to play earnings at all, but I want to point out that this is a fair flag breakdown, and it hasn't really shown any sign of successful buying. So I mean, be careful. I know it has earnings, right? But I do think that if it does pump, right, it would be a short again, because this is not a very healthy looking chart, right? That kind of charts usually result in a sell-offs. So yeah. And the last one I have is CPNG, and this has been, relatively strong compared to the rest of the stocks, right? Growth stocks. So I mean, again, play this on a breakout, right? Don't try to front run these things and then, get stuck and then cry about it. You can see here, this 19.8 is the most important fib level. It's been unable to get over. If it can get over that level, right, you can see it doesn't really have the resistance up till 25. So yeah, break over 20, right? Federal alert here should be able to move up to 25. That's all for this week. Sorry, it's short and sweet. I'll make a much more detailed one next week. Thank you. Have a good day.